Hey everybody, it's Brandon at the Insurance Bro Blog, and today we're going to be diving through the details of a guaranteed universal life insurance policy. It's not uncommon at all to find this type of life insurance policy being referred to as a term to 100 policy or age 100. And the reason for that is it has some unique quirks as a universal life insurance policy that has caused agents to liken this to term insurance, but using the word term is a misnomer. It's not term insurance. It is definitely universal life insurance. And the main reason for this is, or you calling it that, is the fact that the cash value that accumulates in it is practically useless to the policyholder. We'll discuss that as we go through this. So using that term to 100 is a way of sort of explaining, hey, look, this is life insurance that's permanent, but it's cheaper than whole life insurance, and it will last longer than your standard level term policy. So let's get into the details. We have a male, age 45, assumed preferred, and we are looking for a $1 million death benefit. This company tells us that if we want a $1 million death benefit for the guaranteed period that we have chosen, which happens to be 60 years in this example, then we need to pay $8,202.71 per year to accomplish that. I also want to point out that this company is telling us that we have a level death benefit in all years, and we're going to go through some more details about that and why it matters in just a little bit here. So let's get to the ledger, because that's where all of the really insightful information starts to come out. So here we see, again, our $8202.71 premium and our $1 million death benefit. And if we pay that premium for a lot of years, we can keep our death benefit for a lot of years. In fact, we can go all the way down to year 60. And we're still paying our $8,200-ish a year. We still maintain our $1 million death benefit all the way down to that time period. So at the end of this 60-year period, our policy lapses because we have reached the end of the guaranteed payment period and the policy goes away. It's important to understand that we chose 60. Actually, it's the default option in this particular illustration software, so I just went with it. But we can choose a period that is longer or shorter than that. And if we want fewer years, this 8202 would go down. If we want more years, this 8202 would go up. In fact, this particular company happens to tell us that if we wanted to guarantee this death benefit all the way up to the insured's age 121, we would need to pay $10,201.11, so about $2,000 a year more each year, beginning in the first year. Let's go back to this ledger here, because I want to point out that this policy, as I mentioned, is a universal life insurance policy, does indeed have cash value. Doesn't have any cash value in the first couple of years, but it starts to accumulate cash value starting in year 6, and that cash value does grow as time goes on for a little while. Then it will go down, as you see here, as it starts to decline, starting at around year 24. The cash value that exists in this policy is, for all intents and purposes, not touchable by the policyholder. So no loans and no withdrawals. If the policyholder did take a loan or withdraw from this policy, this guaranteed aspect of the premium would go away. So we don't want to do that with these policies. We want to ensure that for a given level of premium, we will always have a given level of death benefit until the end of the guaranteed period. So it's important to understand that even though the policy will accumulate cash value, you can't touch it. Otherwise, you'll forfeit the guarantee that exists on the policy. Also note that the death benefit is level in all years, and this differs from other universal life insurance policies and whole life insurance, where the death benefit can be increasing year over year. Lastly, just because it's here and some people will probably notice it and ask, there's this return of premium column on this particular policy, and it shows us that at year 20, we can get back 50% of the premiums that were paid. Year 25, all of the premiums that were paid. This is a refund of premium feature that is unique to this particular life insurance policy. So if you cancel the policy at this time period, you can leave with all of the premiums that you paid, or half of the premiums that you paid if you if you go at a certain time. But you have to forfeit everything. Death benefit goes away at that point. It's not like you can take out $82,000, for example, in year 20, but keep a portion of your $1 million death benefit. Nope, this goes away entirely. So it's a unique quirk to this particular policy. It's not a common feature for universal life insurance. So don't watch this video and assume that that is something you can get on all universal life insurance policies. You definitely cannot. But yeah, guaranteed universal life insurance is certainly term-like in the sense that you will pay a premium, you'll have a death benefit, and you will, for all intents and purposes, have no cash value. That is the basic functionality. People use it as a way to buy permanent death benefit that's cheaper in terms of annual premium than whole life insurance and other forms of universal life insurance. And if death benefit is your sole focus, that is forever and always, guaranteed universal life insurance is a very good way to go. That's basically everything you need to know as an introduction to guaranteed universal life insurance. So if you have any questions or comments, feel free to leave them in the comment section below. And thanks for watching, everybody.